To the rest of the news on the local market now, and earlier I spoke to Michael McCarthy, Chief Market Strategist at CMC Markets. Michael McCarthy, a fourth day of declines. Not a good start to the month, is it?
No, it wasn't the best start for Australian investors. In fact, we had a fairly nerve-rattling ride in the share market today. The Australian market actually opened up this morning after some positive leads from overseas markets, but we quickly saw comments from European political leadership weighing on the market, and when President Hu of China made his comment and seemed to cast doubt on China's willingness to be involved in the European bailout, the selling accelerated. We saw US futures down very hard, Dow futures down 130 points at one stage, and of course that weighed on the Australian market. We were down more than 1% at one stage during the trading day. However, we did rally back towards the close. The ASX 200 index finishing down only 13 points at 4,172.
Let's go to some company news. And building products company Boral held its AGM. Is there much reaction to how it sees its future?
Well, we did see a rather dramatic share price reaction in Boral shares today. They were down 2%, and that partly related to comments from the AGM today that Boral was expecting the first half of this year to be roughly in line with the previous half. And unfortunately, that was a depressed result for Boral. They did point to a better outlook for the second half of the year with a strong pipeline and looking forward to a pickup in both US and Australian housing markets, but the market didn't appear to put much stock in that, and the stock finished near its lows today.
And the official retail trade figures show a 0.4% lift in national turnover for the month of September. How did retail stocks go?
Well, that gain was very much in line with expectations of analysts and economists, and we saw a very mixed result in the retail sector today. Premier Investments was up almost 2%, but on the other side we saw JB Hi-Fi fall 2%. Most of the stocks in the sector, however, remained unaffected. Myer finishing square on the day, so it did appear that that result was already factored into market prices.
And I see some commodities and the dollar have gone lower. Now, if that keeps going, what are equity investors going to do you think?
Well, in the short term, this is weighing on our market. Oil and copper, two key industrial inputs, are falling at the moment, and that reflects a lack of confidence in the growth outlook for the globe at the moment. The Australian dollar, being a risk asset, is also falling with those commodities, once again indicating that negative sentiment. However, looking forward, that lower Australian dollar is actually good news for share prices because it makes the price of Australian shares look cheaper to overseas investors, and the further down it goes, the more likely we'll see some international participation in the Australian share market, giving us a lift.
Yeah, some silver lining. Michael McCarthy, thank you very much for joining us.
Thank you.